Hey traders. So far the market hasn't set up for the EMA 200 and EMA 50 cross. However, I have taken a few of my regular Forex trades and have exited them as well. And I thought I'd do an initial analysis of the markets right now so you guys can kind of play around with this and then do another one possibly tomorrow when the EMA 50 and 200 setups start to happen. I also took a number of binary trades. So I'll run you through my thoughts around that as well. Okay, so um, basically, I came into the market mid Asian session, had a look, did my binary trades, and then took off again, and then came back in towards the middle end of the Asian session. Okay, so first things first, we jump onto forexfactoryinvesting.com to have a look to see what we're facing in terms of news releases for the day. And also, I just want you to be mindful of the fact, I know I've touched upon this, but I'm still getting questions from various people in regards to holidays, bank holidays, or just public holidays in countries. If there is a bank holiday with a major player within the markets, if there is a public holiday in one of the major players in the markets, try and refrain from trading. So last Thursday, I had a number of emails from people coming in to say the markets were choppy. They had a number of binary options losses happening at that time. Last Thursday, on the 26th of January, was Australia Day. Okay, so we had a public holiday, and when you see those things, try and avoid the markets, try and avoid trades, because what you're going to find is that either there's less liquidity or the market's just going to be choppy constantly. Okay, so today, earlier in the Asian session, um, China had their bank holiday, and New Zealand actually had a public holiday. All right, so it doesn't actually tell you here. It's just be mindful of the fact that when there is one, try and avoid trading around those times. Okay, now going into the London session news releases, there isn't that much, nothing too significant. We've got some releases happening for the US dollar later on, so we've got about 4 or 5 hours without any structured news releases happening. Now, the importance behind structured releases really is to do with if there is a pattern formation happening in the market, then chances are that the market will utilize the news releases to complete the pattern. So remember when I'm talking in particular about the double tops or the triple tops or the double bottoms or the triple bottoms, what you'll find is that chances are either on the third wave going into the fourth wave is where you'll see a pin bar formation happen. Now, if that is combined with a news release, so say for instance, there was a particular good news release happening for the euro at some point late in the Asian session, or even we're expecting some decent news release for the euro happening at the start of the London session. Sorry. So if that was the case, and I looked into the charts and I thought, okay, there's something major happening within the the London session at say 2:30 or so. What I would then expect is going back into Euro USD, chances are that the market would have possibly consolidated a bit longer, waited for the London session to open, maybe given us a bit of a pin bar somewhere down here, then climbed back up, given us a pin bar, a wick to the high, if there was good news, and then brought the market down. So in this case, there isn't that much news release happening, and there possibly was nothing good to report. So as a result of that, the market just kind of just kept going down. Okay, so just be mindful of that and utilize those fundamentals to your benefit. And usually, it's got to be part of a completion of a structure or a pattern as such. Okay. Now, the trades that I personally took were not the EMA 250 cross. However, I'm going to run you through some of that just so you start to get a handle on how to trade some of this. Because a lot of you I know are still struggling with being able to see and discover patterns before they happen or as they happen. Okay, so we'll just go through the initial analysis of the 250 cross first. So in Euro USD, what we've got a bit of a double top setup here. I would not have traded this because again, remember, markets close plus with Forex, unless they're very specific patterns, what you're going to find is that within the Asian session there might not be significant liquidity. And it's also dependent on your strategy and how many pips you're chasing. So if you've got some free times and you want to sit there and go through that over a number of hours, then certainly be my guest. But if you're like me and you're not that patient, what you're going to want to do is jump in when the market's showing you some sort of a directional move. It's about to happen. Jump in then, get in and out within, say, 30 minutes or so. Okay, so in this case, this spike to the high, and then this red candle below would have been somewhat of an indication for more advanced traders that this market is most likely heading in this direction. In this case, you would have had to wait for a period of time before you started seeing your investment go in the money. You probably would have seen it somewhere around here after your spreads. Now, this would have been a good 5-6 hours before you hit your 30 pips going into the London session, okay? And again, because there are no significant news releases, there wasn't any spike to the highs happening around here. Okay, so just avoid that. In relation to our simple strategy, the EMA 50 did cross above the 200. Now in this case, we did not see any specific type of behavior around the 50. Now let me zoom in. What I wanted to share with you is this also. Some of you are utilizing the binary option strategy where when the market comes and approaches either the 50 or the 200, that it actually does offer a wick, right? In this case, see how price does not come down and hit this. So in this instance, some of you have sent me screenshots before where you've tried to jump in this case where the Babon slope is up here and you've tried to jump in below the Babon slope just because it's close to the 50. You sure you could do that if that's part of your criteria, but remember where I've been saying to you that your whole entire goal here is to minimize losses. So in order to do that, what you're going to do is follow your criteria to a T. It's going to be so perfect where if the market comes close but it doesn't interact with whatever your trigger line is, don't take the trade. Okay, because if you do, you lose that trade. In this case, this could have so easily been a very solid red candle. Please don't make those mistakes. In this case, though, if you come down and you see this market cross happen, and now you're certain, because this market has been moving down pretty much all day, you're certain this market will possibly continue to head down. It might come back up at some point to establish a bit of a wave. But however, in this case, what you could have done was look for an entry off of here. So let me just get rid of, where's this? Okay, let me just get rid of this. Okay, so when I grab our fib lines, and we're looking at this point here, right? You could do it in two ways. One is where you could take the present high and come down to the low from last week, okay? Or you could just do the present high to wherever the present low would be, right? Okay. The reason why in this case I like choosing the previous low, so last week or yesterday, or if you're in the middle of the week, look for yesterday, is simply because if the market is running in a particular direction, you are so far away from the 23.6 line that chances are you probably iron out all of possible wins that you would have had anyway. So what I do is I give the market enough moving room. So in this case, like not use the low here, but go down all the way to here to what I can actually see. Now what it does for me is gives me a number of points of confluence, right? First thing is that given this, where the market came into the London session and opened up and broke the low of the Asian session, we're expecting that at some point the market will utilize this actual low Okay, so again, this is the London session. We're utilizing the Asian session low as either a support or a resistance line. Okay, so we can drop a line there if you want to. Okay, so I'll drop a line there. The other thing that we're going to do is drop a line at the actual open. Okay, so market open there. Notice how if you're going across, this candle in particular, the wick of this did respect this line. It's in cases where you see those lines and there's a significant number of confluence points resting around there, that's where you start to apply your criteria and possibly look for an entry. Okay, so in this case, where what I would have done, we've got the EMA 200, right? This would have come high enough for us to expect that the EMA 6 line would come and hit it. We've got the low of the Asian session here, and in this case, if we apply our fibs in the manner in which I did it, we've also got our 50 line here. So where I would have actually enacted my trade would have been straight off past the EMA 200 when price hit here. Okay, now there are also reasons why you possibly wouldn't be taking a trade here, especially a reversal, and that would be when you find a crossover, a session turnover from Asian to London, and especially when the high or the low is being penetrated, there's always a chance that the market is going to pose a tiny reversal. Okay, so in this case, it could be anything from a doji to like a fairly decent solid green candle. So just be wary of that, and that's the reason why I would not take an entry straight off the 200. I would be expecting at least the 50 get hit before I'd want to jump into that trade. And remember your buffer areas, extremely important. So zoom out again. Now in this case, we're expecting at some point that the market is going to bounce back up and either get to, it's probably too close to the 38.2 line, it might consolidate around here, but I would expect that at some point it will come back up and commune with either the 200 or the 50 once the 50 has crossed the 200. And at whatever point that happens, that is an indication for you to start looking for an entry. Okay, it doesn't mean we just jump straight in. It's where you start looking for an entry, and that entry for you would be something that's familiar. And in this case, you might actually have two hits, or the market does establish some patterns like a double top or so, something along those lines happening here. You might even see where it just consolidates briefly, comes back up during the New York session, or even early into the Asian session tomorrow. So start looking for those things, okay? This cross did happen early in the Asian session, but we did not see anything significant in terms of behavioral patterns happen around the 50 here. So we are now completely going with the fact that the market is either going to establish something here or there's going to be another cross back down under the 200. Okay. Okay, Euro JPY, this is one of the ones in which I did a binary options trade earlier. I actually did miss a Forex trade off of this. I'm glad I didn't take that trade. Now, part of the reason why I took this binary trade was one, the market opened up higher and then it started moving south. Okay, we've got wicks to the high. These wicks to the 50 are good spots for you to look for entries in terms of a reversal on the same candle. I normally don't trade Asian session Mondays anyway, and during the weekdays I may come in and have a very quick look early on, just in case the market is bouncing off a higher and a low of the previous day or something along those lines and is continuing in its pattern, like something what we discussed here, to say if the market does do its thing here and then go and do a hit to the 50 or the 61.8 into the Asian session, then I'd be looking for entries going south. But otherwise, you try and just avoid Asian session in most instances. But where I saw the market heading down, market went back up again, and then this candle here, in just the manner in which it behaved, where it came down, bounced back slightly, what I was expecting is some degree of consolidation, either briefly or the beginning of a pattern formation. So when the market does come down in this way, what I'm expecting is that in every sense of the word, the market will give me some sort of a pattern where I'm expecting a hit to the low again, somewhere here, before the market bounces up again, right? So in order for the market to come back down again, it's going to start giving me certain behaviors. In this case, if I zoom in, this candle in particular, I watched it open and then it kind of stagnated right there for a while. I think it was a good 5 minutes or so. When I see that behavior happen, I'm pretty much certain at that point in time that this, for me anyway, and this is partly where the intuition kicks in, is where I'm starting to become aware that this market will possibly head down briefly. I'm expecting pin bars to the low somewhere before market comes back up, right? So what I would do, wait for the pullback, and this wick area is my pullback. Market goes up, and then as soon as it hit my line here, which is the bound slope line, you took an entry. You take an entry off of here, and I think in about 6 or 7 minutes, the market came down, ended up in a nice red candle for my liking, and that was it. Why did I not take further entries on here? Simply because I don't know how far the market's going to go down. Keep in mind, I'm expecting for the market to do this, go up, okay? Because it's starting to give me a double bottom formation happen, right? If it was going to give me a double top formation, it probably would have consolidated and the market would have gone up here, come down, and do something along those lines, right? So I traded that. What I then applied to this was confluence. So when I saw Euro JPY do this, I jumped onto Pound JPY. And guess what? It was doing exactly the same thing, but only here, I actually had a better setup. I had more confluence happening, right? Confluence where? Okay, a number of things. One, when you start to look at the low of the New York session on Friday, right? See that going across? I might as well just drop a line here. So New York low going across plus EMA 200, right? And then we can start applying pattern formations happening, right? So same thing, correlation from Euro JPY. This behavior here, market pushed up, hit my 200. That's exactly where I took it. It was a very close, very tight trade. Took it, ended up in a nice red candle. Again, how far is this going to go? I have no idea. So I take just a singular trade off of that, right? And I believe, do I see? Okay, and it was CHF JPY. So same thing happens here. Okay, study them. Pick 3 or 4 of these types of setups that happen at different times throughout the day, and trade them. Those could make up your 5 to 10 trades for the week. For me, I've already done my 3 trades so far. So if I pick up another handful of trades throughout the week, I'm happy. Okay. Now going back to here to talk about the Forex trades, no cross of the EMA 50 and the 200. So all I'm looking at this stage is pattern formations. Going across to Pound USD, same rules apply to Pound USD as we saw in Euro USD. Okay, what you can also do in these instances is zoom out to have a look to see where the market is overall in terms of positioning. Okay, you can jump onto higher time frames as well and look to see what the market's been doing. If you were to follow Elliott waves, X, A, B, C, D, possibly. We're now expecting a reversal to happen. You could do it something along those lines. If I can just quickly remove this, and we're going to play around on a 1 hour chart here with our fib. So if I was to utilize this, okay, and we're just looking at this behavior here, right? So from this high point to this low point, the market comes down, and then the market bounces back up and goes all the way past the 78.6 line to come back down and bounce off the 61.8. Once that's happening, we know that this market's going to head up, and sometimes this is how I qualify whether an Elliott wave is in motion. Okay, and I tend to do these on a 1 hour chart more so than a 4 hour chart, because I think 4 hour charts would be more conclusive, but it takes a greater amount of time in order to set them up. Okay, so you could do that. And then what I would do in this instance, go all the way back up to now the new high, okay, and just look at the interaction that the market is having with whatever's going on in the present moment, okay. So if it's a significant bounce off a line, study that. See if there's a entry for you there. Start looking for patterns again, and start looking for candlestick patterns in particular, like behavioral patterns, like pin bars, that sort of stuff. Okay. Okay, let's get out of here. Let's jump back onto a 15-minute chart. Now, this again, like the Euro USD, massive move up, back down. We've got a bit of a double top setup happening. This is more conclusive than on the Euro USD. Notice how here the market just kind of consolidated for a while. You've got this candle before this one pushes aggressively down. You'd start to expect that the market will go down, but this is still the middle end of the Asian session, so you kind of avoid it. In this case, the market gives you more of a significant move up and then down again. So when you see this sort of behavior and then market just kind of consolidates, it slows down, followed by another couple of movements. By now, I'm expecting either the market again, if there's news, market's going to bounce back up slightly. If there's not, I'm expecting now that the market may continue going south. But remember, going back to our key strategy, the EMA 50 and 200 cross, just like Euro USD, this cross here, the Euro USD crossed early in the Asian session. Okay, we come to the behavior around the EMA 50. So the market comes down, we get this push up on the 50 and then down again. Now what we're expecting is possibly if the market is going to do anything, it's going to push back down or go back up or something along the lines on the 50 to give us some sort of a pattern that this market's ready to go up in this direction again, or down and up, down, up in 4 candles and then an aggressive move going north, right? None of that happens. So what we do, we avoid that trade, right? Market continually goes down. Now, if for those of you more advanced traders that trade during the Asian session, if you jumped into that, best place to jump in would be here somewhere. This behavior here would have been your confirmation. Long time to wait, but you would have been about 50 something pips in the money right now. Okay, so let's jump again. Let's just go through the rest of this. Pound JPY, no significant crosses happening, but we've got a bit of a pattern formation that started. AUD USD, no significant crosses here yet. There was something early in the Asian session or at the very start, or you could probably say that started happening at the very end of the New York session on Friday. Okay, no significant patterns for my liking here. This one, AUD JPY, is one of the Forex trades I did do. We'll come back into what I did there later on, but no significant cross happening at this stage. So we really don't do much with it. What we're expecting is that price is going to at some point continue up, come bounce off the 50, and we're going to trade along with it. Okay. USD CHF. Now, always keep in mind USD CHF and Euro USD will negatively correlate with each other. So they're pretty much like mirror images of each other. And what you're going to find is if USD CHF is now bouncing off the 200 and heading down, the Euro USD will start to do that very closely soon. Maybe not off the 200, but you're looking for now a bounce up somewhere. So as soon as you as soon as you see the USD CHF behavior happen, you start avoiding possible shorts or puts on the Euro USD. Okay, and you can interrelate those two in a way in which, say for instance, you've got a very good setup happening on Euro USD, and you just want that extra point of confluence or confirmation on whether or not this is going to happen. you quickly jump on to use USD CHF and see what's going on there. So in this case, if I was thinking for some reason that this market's just going to automatically continue going this way, what I would very quickly do is go and have a look at what USD CHF is doing. So in this case, where USD CHF is coming down slightly, I'd probably say the chances of Euro USD coming down as well is slim. So I'd avoid that trade, or whatever my strategy there for a short or a put would be, I'd avoid it for the time being. Okay. This too, you could probably say a bit of a pattern formation happening here. Normally, you could trade USD CHF or CHF JPY in this manner, but given the public holidays today, I'd probably avoid trading them in the Asian session. Okay. CHF JPY. Okay, so here's, we've already spoken about the binary trade we did here. Now, here was a bit of a pattern formation, and when you start seeing some of these pattern formations, now forget all of this. Okay, let's get rid of this as well. When you start seeing a pattern formation happen here, you could start looking for entries, and I actually did do that today. I did with pound JPY. Okay, so my entry for pound JPY was straight after, see this candle here, followed by this tiny doji. My entry was here. Okay, that was my entry. So let me draw some lines in. Okay, my entry was right at the bottom of this candle here, and my exit was somewhere up here. And the reason for my exit, I'll give you a bit of an outline. I saw this pattern formation happening here. My entry goes in here, and this is reason and key as to why you've got to be very tuned in to what's going on in the markets. Is where I was expecting that the market will go up, do a bit of a pullback at the open of London, and then climb back up again, right? So in this case, what happened was I went in too early, got in here, and this is my pattern formation. First wave, second wave, third wave, fourth wave. Got in here. The market didn't move significantly up. Well, not significantly. We managed to get 15 pips or so, and then it started pushing down again. I didn't bank profits here. It starts to push down again. And this is what I was talking about earlier, where this sort of a market is a beautiful training market. Because for me, I kind of knew that this is going to either come down and give me a third hit before it goes up. And so in that instance, what I did do, I had my stop loss down here somewhere, and I was prepared for this. Right? But for most traders, what you would find is that you probably get stopped out too quickly because you probably have a very tight stop loss. That's one. And two, you probably freak yourself out when this candle starts moving aggressively down. It wasn't until this candle came down that I was actually out of the money somewhere around here because of spreads, right? So I actually didn't exit my trade. I waited. When this wind moved up. I kind of knew at that point in time this market's going to continue heading up. This was a beautiful aggressive move up. I was back in the money, and then when this behavior happened off the 50, when these two happened, now there's a couple of things that I waited for. One was if this next candle was going to come down and issue me with a red wick somewhere even around here, or if it closed in the red, I most likely would have exited that trade straight away. Okay, I would have probably taken a very slight hit, but in this case, market moved aggressively back up again. So that for me was a bit of a confirmation that this market's continuing to move up. The reason why I exited that trade on here, and usually what I like doing is again with pound pairs and euro pairs, is if the market isn't behaving exactly straight off the bat the way you'd like it to behave, then what you should be doing is looking for whatever your minimum take profit is and run. Okay, so in this case, what I did do was I was expecting that this market will give me at least 30, 35, 40 pips. So what I tend to do from this point here, market here was still only about 17 pips in the money, right? By here, I was possibly just sitting on par. By the end of this candle, as soon as it got to about 30 pips, I probably would have hit about 28 or so with spreads, but as soon as the market showed me about 30 pips, I exited. The reason was when you start seeing the market becoming choppy like this, chances are something disastrous could happen. Okay, if you're doing 1 or 2 micro trades, micro lots, sorry, that's probably not going to hit you too hard. But when you're doing 5 lots or 10 lots as such, that will make a world of difference. Okay, so in this case, notice how very good decision. Next candle comes down, and I would have instantly lost about close to 10 pips of my profit. And then notice how in the last 45 minutes, the market comes back down from that high point about 50 something pips, right? The other thing I noticed was straight off this is when the Euro JPY started, or the Euro in particular, started to behave oddly. When you start seeing that sort of behavior, get out of the market straight away, okay? Even if you've got a tiny loss, you can bank the loss and claim that later on, but initially, get out of that. This was another trade that I actually did. Same rules apply. Correlation between pound JPY, pound AUD JPY. And normally I don't like trading AUD pairs, and I definitely shouldn't have been trading today because of the holidays. But this pattern was forming for me, and I thought, okay, I might as well do this. So I jumped in again, and this for me, see this green tiny candle there? Let me zoom in. These green dojis are my confirmation of a pattern continuation or a wave continuation. Remember, we've spoken about this, that normally you'd like to see more of a wick to the bottom before you even consider taking a binary trade on this next candle. But in this case, for me, this was pattern confirmation. So I jumped in at the end of this on here. Now, again, 6 or 7 pips in the money initially. However, notice how 45 minutes the market does pull backwards very slowly. These slow movements for me are okay because they're if the market's moving hard and fast, you're screwed. Okay, and usually that's the reason why we have stop losses, because just in case the market just goes boom like it did here in this case, that you are to some degree protected. Whereas in this instance, I was just playing patterns. There's no cross of the 50 or the 200. I'm just going off my pattern. And in the same way that this candle moved aggressively up, I actually looked at banking my profit, primarily because of the behavior on the Euro JPY and on Pound JPY. In this case, I think I did about 20 pips or so. I think I would have exited on this one, but I banked about 20 pips off that, 30 of the Pound JPY, and I did roughly about 20 off the CHF JPY. Same thing, correlation. Off this candle, these two confirmed for me, market's moving in this direction. Goes and hits the EMA 50, that's 12 pips. I didn't exit. Come back down, and we would have been out of the money at this stage given spreads. And then, see, back in the money again. This behavior here is the sort of behavior then also confirms to me it's time to get out. Market's going to continue to be choppy. Okay, I got, I think, 20 pips roughly is what I banked there. So 70 pips, even in a market that is choppy, is not clear in its directional move, is always really good. Okay, that's the sort of stuff that I want you to start demoing. Okay. Don't go live just yet until you get some experience. But here's what I'm saying, that even if you get your directional move wrong, there's every chance that you can still bank a very comfortable profit. Okay, so in this case, that's exactly what I did. Right? Now, going back to pound JPY, where the market has tanked a bit here, what we can start to do is to start analyzing what the market did in terms of fibs. So we've got a wick to the high at the 50, and then the market moves back down again. Straight after this behavior here, I would no longer count this to be a conclusive pattern, and I'd get the hell out of there. Okay, we do speak about behaviors around the 200 or the 50. In this case, yes, this was a confirmation. Market would have maybe gone up, but at the same time, this behavior, this bounce off here, is also a confirmation that this market may be going down. And this also ties me up to another binary strategy that I've played with in the last year or so, but I have really not spoken about it. And that's simply where when you see that the market is moving in a particular direction, and then the market stalls, either gives you a pin bar or consolidates briefly, and then you get somewhat of an aggressive move down again, right? So if in this case market's going up, aggressive move down. See how in this case this red candle is the same size as this green candle? We look at that and we say, okay, I'm going to avoid that trade. Similarly here, where this red candle is bigger than this green candle, sorry, we avoid that trade as well. You could count this to be somewhat of an evening star. Probably wouldn't, because this was nowhere near the high. Let me find a better example of what I'm trying to suggest. Well, we can come back to this. It's where you see an aggressive move in one direction followed by a decent sized candle of the opposing color, where this red one comes back down, but it's not a long one. It's not a big one that comes all the way down here. So in this case, it's not the size of the body. This body is not the size of this body, as the case is here. When I see this, I'm expecting a potential entry on the next candle. Chances are this is going to continue going down in this direction, the next candle. So what I would do, again, draw my fibs in, look at where all my lines are, look at Babylon slope, look at EMA 6 line, and look for an entry on the pullback. Okay, I did see a number of these today. See, this one you could potentially do. All of these actually you could have potentially done, but you just wouldn't be happy with the size of the body itself. Okay, this one here, okay, this is a bit of a continuation pattern that's happening. So this is again where price opens. Let me zoom in. I keep forgetting that you guys might not be able to see it. Price opens, goes up, hits our EMA 6 line, comes back down. We've got a bit of a wick to the low, but in this case, the body of it is not the size of this one. So what I'm expecting is that this next candle possibly be the same color as this one here, right? A stricter criteria would say, well, I would like for price to open, create a bit of a wick where I take my entry, and this would be a put for the remaining duration of this candle. Okay, that's the sort of observations that you want to start making, because that's what's going to help you develop strategies that it's going to allow you to have more wins than losses. Okay, so look, what I'll do now, I'm gonna switch off there, but what I'll do is I'll come back and do another analysis video sometime during the week when the actual 50 and 200 crosses happen. Hopefully where a setup happens around the 50 and the 200, and so I can actually just take a trade off there as well at the same time. Okay, I think that pretty much covers everything that I needed to explain for today. Look, next week I'm going to be in Tassie for about a week. So there's more traveling that's happening until the end of Feb. So for those of you that are actually in Tassie, I'm not sure if I'll be able to meet up with you because I will be traveling, and I won't be in one place for longer than a day or so. All right, so I'm practically just driving around Tasmania. All right, so if I am slow with replies to emails more than usual, I do apologize, but do keep your emails and stuff coming through. Okay, especially your success stories. I love that. That's what keeps me going. All right, guys, all the best for the rest of the week. And actually, just before I run off, you know when I talk about behaviors around the EMA 50 or the EMA 200? This is what I'm speaking of, where the market comes down, goes up, back, and we start seeing a bit of like a higher low happening, establishing itself. We start seeing these waves. That's my buddy. We're doing squats. Remember the squats challenge that I've got on my Facebook page? All right, so we start doing these sorts of waves. These are the behavioral patterns that we're looking for. This one in particular comes down, aggressive move away again. We've got a higher low to this one and to this one. What you can do, binary options. Again, you might want to avoid this straight off the bat of going into transition into the next session. But what you can do is look for a bit of a pullback where it's hitting the 200 and you take a call for the remaining duration of that 15 minutes. Okay? All right, guys. All the best.